Welcome back to Technically Analyzed. Today we have an update on Gevo price action, and I'm currently at the weekly chart of Gevo. Before we start, you will notice that I cleaned up the chart by removing some of the downward pitchfork, which is now irrelevant, but it was nice to see how it actually defines the channel through which the price action is actually moving. So again, we are on the weekly. I'm still showing the exponential moving averages, and you will notice here that we have the moving averages aligned. So this moving average is actually perfectly aligned with the median of that pitchfork, and also we have here the 5 is aligned above the 9, above the 13 and the 20, which is very nice, bullish, pointing up. So that's good. Now another thing that you will notice here is that the recent rally that we had for the price action of Gevo was actually the 5 EMA moving towards the 50 EMA and going and crossing it. So that is nice, right? It makes sense. That's like a mini golden cross. It's actually a golden cross. So golden cross is whenever a lower EMA crosses a higher EMA. But the most significant one is the 50 crossing the 200. So here, one thing to notice is that the 9, it's the turn of the 9 now to cross the 50 EMA, right? So, but here you will notice that today there are many signals saying it should hold and bounce back up, all right? So first of all, we have the 5 EMA is aligned with the median. It was rejected, if you notice here. All right, so there was not actually even tested. And then we also have the 9 EMA is almost going to cross the 50 EMA, which is also another bullish, indicating that we can have some kind of bounce back. All right. Now, before we make such a decision, and we will look actually at the daily more than the weekly, but I just wanted to point that out. Now, let's have a look at other indicators like the RSI. The RSI is indicating that this is not overbought. Okay, so let's go and have a look at the daily. The daily, as we said, again, this is the falling wedge. We expected today to drop. Right? We expect it to drop. We expect it to actually test that 1.66. So many things are actually showing that this is going to be a good support, right? It was the super trend, right? The super trend actually acts as a strong support and resistance level. All right, so you will notice here that we are in an uptrend, and that's why we have the super trend being green. And you will notice here that strong rejection, that candle here shows that it tried to drop all the way down, but then it got really rejected strongly, and it went all the way up to respect the 9 EMA. All right, so that rejection was almost off the super trend here. All right, another time here is, you see, it didn't cross it even. One other thing that I wanted to share, and it seems that people appreciated using the indicators and the charts and showing how to use it, is the Fibonacci extension. All right, so my question is, could we expect that the price will stop here? And the answer is actually yes. All right, so if you had some information here, this is the swing low to the swing high, and then you wouldn't know that until you actually get that low here, right? So it dropped low and then went high, then I would consider this my next swing low. So if I did this, notice here how it perfectly aligns with this price action. All right, resistance, which was also the super trend, by the way, and then it goes here, rejection, it stays below, then it opens here, goes all the way up, crossing all of these Fibonacci levels, and then it closes below that level, right, the 78.6%, and then it goes from here or it opens here, and then it drops all the way here, right? Tests this and then goes here. All right, so that's, you see here, that is the level where you should expect it, like spiked all the way up, but then it went back down to the 100% level. You could lay these levels and then you say, okay, we are testing this right now. Is it going to hold? Is it going to reject? And now you are in control to some extent. You're just confirming your analysis and expectations. All right, so managing your expectations. Okay, if you have these levels, you would never say something like it's going to the moon. You should be expecting what is the next level, right? We can do the retracement, Fibonacci retracement. And Fibonacci retracement, you can consider it from the low to high, right? So if I go here and say, okay, where is my swing low? I could take it from here and go all the way up to here, right? And then you will notice that we are at the level of 50%. Okay, but then another person would say, no, but this is not the closest. So this is the closest swing low, which is here, right? After which that rally happened, or even here, to be more accurate. And then you will notice that we are actually at the level of 61.8%. All right, so that's why these indicators are actually subjective, and it doesn't really, it depends on the pivots that you are choosing. We don't know, so that's the thing. There is no indication, and actually Fibonacci levels should not tell you this is where I buy. It tells you, okay, here are my levels, I'm testing this, and I keep watching my, if I'm trading, and then I keep watching and say, okay, did it hold? Did it reject? Did it break? All right, so that's what you need to do with these levels, is to just to confirm the direction and then make a decision. All right. Another thing that I would like to discuss here is levels and the structure. All right, so let's have a quick look at the major structure. Let's go back to the daily of the chart or the price action of Gevo. All right, so what are the major levels of resistance and support? So I'm going to use horizontal lines. This seems like a major level. All right, let's give it a color. Okay, another horizontal line. So I'm going to draw all of these levels and then we can talk about it. So here's another level. You could say this is another level. And I think there is a way you can actually lock the levels, the chart, and then you can just keep dropping these horizontal lines. So I'm going to extend this one a little bit here, and then I'm going to put another level here. All right. And you can add as many levels as you want, but you try to find the most major resistance and support levels. So the structure is going to always tell you, where did this level come from? All right, so you ask yourself, like, why did it stop here? All right, and we could see that it was a major Fibonacci level, yes, but what else? Where did this come from? It's basically a structure that came, or it's a line or a resistance that came from a structure. It was a support here, it became a resistance here, and now it's still a resistance here. All right, this one is a little bit far away from us. We haven't tested that in a while, and we have been dropping. All right, but that is a level that I would be careful with. Once a PR is dropped or something, then we are going to break this resistance, and then we are looking at that very major resistance level. All right, so the fact that the level we are at this point is not any of these major resistance or support lines is keeping me a little bit worried. So let's go back to the daily and check for these other indicators. So here I have the RSI, and you will notice that it dropped. It was super hot, it was above 70, and then it dropped slowly, and now it's a high level, yes, but it's not overbought or overvalued for this level. The other indicator that we can check is the MACD, and the MACD is showing actually some kind of a crossing here that's gonna happen, right? But one thing you will notice, and you will find here that it's slowing down. But the thing is, if you look back, all right, so it's very possible it can go back up again. So it doesn't mean that if this is happening, this means it has to go in the red and go down, and it starts a downtrend. What happened here is that it was bullish. It made a couple of um, legs here. So that's why you will find the MACD is actually like some kind of a, it goes all the way down and then goes all the way up again. All right, so if we go back here, that is a possibility. All right, so it's very possible they will diverge again and go back up if we are having some kind of a other leg, bullish leg going up. All right, so that's what we can expect here. But that is it. Another thing that is not making me comfortable, right? So the fact that we don't have a major level here, and also that one here, and all the moving averages are pointing down to some extent. So they lost all of that slope here, very high slope going up, and then started to flat, and then started to go back down with a negative slope. That's not very nice. All right. So what about less or smaller time frames? So let's remove this one here. All right, so with the 4 hours, we are already in the negative, and there is a very high possibility this is going back to the green, which is good. All right, if you check the RSI, it is actually a low level pointing up. It's ready to go up, so that's a good indication. It's bullish. But also you will notice here that we are bouncing back from the lower bound or the lower line of the falling wedge. All right, which is bullish. It means it's rejecting, it's going up, rejecting. You see the candle? This is like a hammer. This hammer here, it means that this is going up. And you will notice also that this sharp slope of these EMAs all of a sudden started to lower that slope, and maybe it's going to go back up. So overall, I'm seeing mixed signals, which is confusing. It's not comforting, but at the same time, I feel it's more bullish, and I'm seeing another spike. Of course, there is a possibility that it will go down, and if it does, we know where to expect it's going to find support. So here's the question that we get asked is, what should I do? All right, I am at high level here, and what should I do? I'm stuck there. All right, how far should I wait until it drops? Now you have some sense of how far it's going to drop, right? So that's good. The other thing is that, okay, should I buy here? Now, if you look at this, there are so many signals saying this is going back up. All right, so should you buy here or wait maybe to have another dip? So the question is, if you have X amount of money that you are going to use to average down, all right, what I would do is that I would spend half of this maybe here, averaging down. If it goes even lower, I average down further. If it starts to go higher, right, so this is when I could actually even, again, average down, because it's still going to be, even though it's higher than this level, but it's lower than the level that I'm currently at. All right, so it's going to be considered to some extent averaging down. All right, now is it an entry point? Should I enter here? The question, the same thing that goes here is that you could enter, take a small position here, and then wait a little bit and see where it's going. If it's going to cross that level and hold a little bit, that's bullish. I would go all in. If it's going to drop further, I would wait until it finds the next support, and then I would average down, and then I ride it all the way up in the next leg. So that's what I would do if I'm in these two situations. All right, so that's it for Gevo. Good luck, everybody, and I wish you success in your trading.